All right, let's tackle a huge problem for anyone trading new meme tokens. How in the world do you manage that absolutely insane volatility? We're going to dive into a practical framework that can bring some serious order to all that chaos.
And we have to start right here, because this is, I think, the most important idea of all. In the wild west of these new tokens, your entry point, honestly, it's not the most critical thing. Your survival and your profit, it all boils down to how you manage the trade once you're in it.
And this is exactly why. We are not talking about normal market swings here. This is price action that feels completely random, almost like it's designed to shake you out and steal your money. The whole structure can just flip on a dime.
So that's the million-dollar question, isn't it? When everything feels like pure chaos, how do you actually build a system that gives you an edge and, keeps your emotions from running the show? Well, it all starts with picking the right tools for the job.
And this, right here, is our answer, a simple but really elegant hierarchy of time frames. We're going to build a system using the 5-minute, the 15-minute, and the 1-hour charts, and each one has a very specific job to do.
So the key here is how these three work together as a team. The 5-minute, that's where you might spot your entry, but then the second you're in, you look to the 15-minute to guide your decisions, and you're using that 1-hour chart as a high-level filter to keep you safe.
Now, you might be thinking, why not just jump from a 5-minute entry to, say, a 4-hour chart for the big picture? And that's a great question. The problem is, the 4-hour is just too slow. It's disconnected from the fast action. It creates more confusion than clarity. This system works because the 15-minute and 1-hour charts are close enough to your entry to give you relevant, actionable info.
Okay, let's break this down, starting with your co-pilot for the trade, the 15-minute time frame. You've got to think of this as your immediate guide once you're in a position. Its number one job is to bring clarity. The 5-minute chart is just full of noise, spikes, fake moves, all designed to make you panic. The 15-minute chart smooths all that out, so you get a much clearer picture of whether the real momentum is actually on your side. And here's what that looks like in practice. You're using the 15M to see the immediate trend. You're using it to decide where to move your stop loss in a logical way. It helps you spot those small but important support and resistance levels. And, this is huge, it stops you from freaking out over some scary-looking candle on the 5-minute chart.
Here's a really simple rule of thumb you can use. As long as the price on the 15-minute chart is still intact, making higher highs and an uptrend, you can probably relax a little. Your 5-minute entry is likely okay and you can let the trade breathe.
Okay, so if the 15-minute is your guide, the 1-hour is your strategic filter. This is the one that keeps you safe. It helps you see the forest for the trees.
Its whole purpose is to give you that big picture context. Is that awesome 5-minute pump you just jumped into running straight into a giant wall of sellers? The 1-hour chart is what's going to tell you that. Think of it like your early warning system for danger ahead.
And this is how you use it to survive. The 1-hour tells you the overall mood of the market. It helps you see those big, scary resistance zones where a rally could just die. And, maybe most importantly, it helps you avoid getting greedy and overstaying your welcome in a pump that's running out of gas. This is all about protecting your profits.
And man, this is such a critical warning. You will see these setups all the time. The 5-minute chart looks like it's about to absolutely launch, but if you just take a second to zoom out to the 1-hour, you see it's already breaking down hard. This one little check can save you from so many bad trades.
So, let's tie this all together into a system you can actually use right now. 3 simple rules that can bring total clarity to how you manage your trades.
Rule number 1 is all about psychology. The 5-minute chart is pure noise. It's practically designed to make you emotional, to make you panic buy and panic sell. So your first job is to just detach from it. Use it for your entry, sure, but then look up.
Okay, rule number 2 is about action. All of your active decisions, like moving your stop loss or deciding to hold through a little dip, those should be based on what the 15-minute chart is telling you. That is your source of truth for the health of your trade moment to moment.
And the final rule is all about strategy. The 1-hour chart is what sets your expectations. If the 1-hour looks bearish, then your trade is probably just a quick scalp. But if the 1-hour is bullish and breaking out, then you might have a real runner on your hands. It tells you what kind of game you're actually playing.
And we end right back here, because this is the ultimate lesson. Finding a good entry can make you money on a single trade. That's true. But it's disciplined management, using a clear system like this one that lets you keep that money and actually grow your account over time. That's what it's all about.